Hey everyone, welcome back to the deep dive. So, you know how it is. You want to stay on top of things. Especially in this crazy crypto world, there's always something new popping up, and you need to be able to cut through all the noise and really understand what matters, right?
Exactly. I mean, it can be so overwhelming to try to keep up with all the new developments and figure out what's just hype and what has real potential. And that's what we're here for. We take those deep dives, sort through all the information out there, and pull out the really key insights for you.
Yeah, so you don't have to spend hours reading through white papers and articles. Speaking of which, today's deep dive is into something that's been generating a lot of buzz lately. MegaETH.
Yeah, MegaETH. It's this new layer 2 solution for Ethereum that's been making some pretty bold claims. We've got a great article from Cointelegraph magazine, some really detailed research straight from Mega Labs, and we've even poked around their GitHub repository to get a better sense of what they're building.
So our mission today is to really unpack all of this. Like, what exactly is MegaETH? What are they doing differently? What are the potential benefits? But also, importantly, what are the trade-offs? And ultimately, what kind of impact could this have on the whole Ethereum ecosystem? Is this a game changer, or we may be getting a little ahead of ourselves?
Right. Those are the big questions we're going to try to answer.
So let's start with the basics. What is MegaETH promising in plain English? Like, what's the big selling point here?
Well, the headline is speed. They're claiming to bring Web 2-like speed and massive scaling to Ethereum. We're talking about response times of under a millisecond, and the ability to handle over 100,000 transactions per second.
Okay, whoa. Those are some serious numbers. For context, how does that compare to what we're seeing with existing solutions?
Oh, it's way beyond anything currently out there. Even Solana, which is known for being fast, has only reportedly reached around 15,000 transactions per second, and that was in a private test environment where they were using 60 times more gas than current Ethereum layer 2s like Base. MegaETH's aiming to hit that 100,000 TPS mark with a very high gas capacity.
Okay, so we're talking about a potential order of magnitude improvement, at least in terms of raw transaction throughput. And this isn't just some random project, right? There's some pretty big names involved.
Yeah, the backing is pretty impressive. We've got Ethereum co-founders Vitalik Buterin and Joe Lubin on board. And it's not just a casual endorsement either. Their deep understanding of Ethereum suggests they see a real path forward with this design, despite the compromises it makes on decentralization. We've also got Shurem Kanan from EigenDA, the influencer Kobe, and even Mert Mumtaz, who's a big figure in the Solana community. That kind of support across different corners of the crypto space definitely gets your attention.
Absolutely. It makes you want to dig deeper. Okay, so they're promising this incredible speed and scalability. But as we know, with anything in crypto, there are often trade-offs. What are the potential downsides here? The article mentions some optimizations that might raise some eyebrows.
Yeah, it's really interesting. They're very deliberately choosing to prioritize speed and efficiency over some aspects of decentralization that many in the crypto community hold dear.
Okay, so let's unpack that a little bit. What are the key differences, these optimizations that are making some people uncomfortable?
So, first of all, they have no plans to decentralize the sequencer. Most layer 2s talk about eventually distributing that process of ordering transactions, but MegaETH is sticking with a single active sequencer.
So one central point of control, essentially. I can see why that might make some people nervous.
Right. But the argument, as Prasad Mahadik from Delphi Digital explained, is that it gets rid of the need for consensus among multiple sequencers, which takes time. With just one, they can use super high-end equipment to process transactions incredibly quickly. He even mentioned that the speed of light itself becomes a limiting factor at these speeds when you have nodes spread out geographically.
Wow, the speed of light. So even physics is working against us when it comes to decentralization at this scale. Interesting. Okay, what's the next big difference?
The second key difference is data storage. They're not posting all the transaction data directly to the Ethereum blockchain. They're using EigenDA for that.
EigenDA, that's another project we've been hearing a lot about lately. But the article did mention some concerns about its security.
Yeah, Cointelegraph called it less secure and as yet non-battle tested. So it does add a layer of trust that some people might not be comfortable with. Basically, they're trusting EigenDA to be a robust and reliable data layer. Now, the MegaETH co-founder Yang argues that EigenDA gives them the high bandwidth they need and that it's actually very secure thanks to EigenLayer's restaking mechanism and their Eigen token. They've also got plans to make it even more robust going forward.
So it's a bet on EigenDA, essentially.
You're here, Sandy.
And the third big difference?
No decentralized consensus within MegaETH itself. Now, this is a big one because, don't trust verify is like a mantra in crypto. Layer 1 blockchains need that robust, decentralized way to agree on the transaction history. But Layer 2s can actually be more flexible here. They ultimately rely on the security of the underlying Layer 1, like Ethereum, so they can choose to be more centralized internally and just focus on proving that their transactions are valid back to Ethereum.
So they're essentially outsourcing the security to Ethereum, which allows them to streamline their internal processes. It's a very calculated trade-off.
Exactly, and the article even suggests that MegaETH might be Ethereum's answer to Solana, which has been gaining a lot of ground by being faster and cheaper, partly because they're using centralized data centers.
Right. So it's a strategic move to compete in that space. I've even seen some people suggesting that MegaETH is putting pressure on other Ethereum layer 2s like Base to figure out how to scale faster.
Yeah, Brad, who's the head of growth at MegaETH and a well-known crypto personality, talked about that. He said other layer 2s are feeling the heat from Solana. He even mentioned that Jesse Pollack from Base has publicly acknowledged this pressure to scale. Bread's argument is that MegaETH's design lets them do what he calls vertical scaling, similar to Solana, but as a layer 2 on top of Ethereum security. So the goal is to be super big and super fast without sacrificing that underlying security.
That makes sense. It's about trying to get the best of both worlds. Okay, so we've got a good sense of what MegaETH is trying to do and how they're approaching it. But how did this all come about? What's the origin story?
It all started with Yilong Li, a computer scientist from Stanford, about 3 years ago. He was reading some blog posts by Vitalik Buterin, one from 2021 about a high-throughput centralized chain, and another from 2022 about using data availability layers like Celestia.
It's interesting how those posts were the spark for this whole thing. So what did Leedy take away from those posts?
Well, he told Cointelegraph magazine that after reading those posts, he was convinced that, from a technical standpoint, it was theoretically possible to improve blockchain performance by orders of magnitude. But he felt that nobody was really pushing hard enough in that direction at the time. So he got together with Lei Yang, who'd worked on early concepts for EigenLayer with Sriram Kannan. And that's how Mega Rollup, which later became MegaETH, was born.
Wow, from a blog post to a full-blown project. And they've managed to attract some pretty serious funding too, right?
Oh yeah, they've been quite successful on that front. They raised a $20 million seed round last year with participation from some of those big names we mentioned, along with venture capital firms like Dragonfly Capital and Robot Ventures. Then they raised another $10 million from retail investors through Kobe's Echo platform in December, and just recently they brought in another $30 million through their Fluffle NFT sale. So there's definitely a lot of belief and a lot of money behind this project.
That's serious capital. It
Yeah.
definitely shows they're in it to win it.
Let's go back to EigenDA for a minute. The article made it sound like it's absolutely essential for MegaETH's performance goals. Why is that?
It comes down to bandwidth. MegaETH needs to process and store a massive amount of data to achieve those transaction speeds. And Ethereum's current data blobs just can't handle that. Even with the planned upgrades, like doubling the capacity with the Pectra hard fork and things like pure data availability sampling, it's still not enough. As co-founder Yang put it, such high bandwidth is unavailable on any DA platform other than EigenDA. So they're putting a lot of faith in EigenDA being able to deliver on that promise of high-speed data availability. But we did touch on the security concerns earlier.
Yeah, even Bread acknowledged that EigenLayer's security hasn't been fully battle-tested yet, so it's a bit of a trust leap, but they believe the potential benefits outweigh the risks.
Okay, so we've got a single sequencer, data storage off-chain with EigenDA, and no decentralized consensus within MegaETH itself. It's easy to see why some people might think this is basically just a centralized operation dressed up as a crypto project. But the article did mention some decentralized elements, right? It's not completely centralized.
You're right, it's not just a centralized data center. They've actually implemented 3 peer-to-peer networks to help ensure accountability and verify the data. First, you've got full nodes that re-execute all the transactions to independently verify the blockchain state. Then there are provers who use cryptography to double-check the sequencer's work. And then there are replica nodes that receive condensed info state diffs and update their state without having to re-execute everything, which means they can run on less powerful hardware.
So it's like a checks and balances system, even though they've centralized the transaction ordering process. And those replica nodes sound particularly interesting. they're a way to keep the network more distributed without requiring everyone to have super powerful machines, right?
Exactly. It lowers the barrier to entry for participating in the network and verifying the sequencer's actions. And as the article pointed out, this combo of node types allows for decentralized validation, even with that centralized sequencer. Plus, the sequencer has to put up a lot of collateral that can be slashed if they misbehave. They even have a backup sequencer just in case.
So there are some safeguards in place. Okay, now the article highlighted one particular use case, high-frequency trading. How does MegaETH's architecture benefit that kind of activity?
Well, Prasad Mahadik from Delphi Digital made a good point about this. With a single sequencer, market makers and high-frequency traders can collocate their infrastructure really close to the sequencer. That drastically reduces latency, the time it takes for orders to be sent and processed. He estimated it could be 2 orders of magnitude lower compared to trading on layer 1s. He even thinks this could open up DeFi to institutional players who are super sensitive to even tiny delays.
Right, because in that world, milliseconds can mean the difference between making money and losing money. It could definitely attract a new breed of user to DeFi. Now, the article also mentioned this group called the Mega Mafia. What's that all about?
The Mega Mafia is basically a bunch of developers building new dApps, specifically for MegaETH. Now, because it's EVM compatible, you could just port existing dApps over. But the really exciting stuff is being built from scratch to really take advantage of that high speed and throughput.
Give us some examples. What kind of things are they building?
We're seeing high-speed DEXs like GTE, perpetual futures platforms like Valhalla, and then some more out there stuff like Euphoria, which gamifies trading with chart betting, Sweep, which is like a live streaming platform where you can bet on events in real time, and even this ambitious 3D world called Autonomous World Engine, or AWE, where you can acquire in-world currency, kind of like a blockchain-based Roblox.
Wow, that's a whole new level of on-chain gaming and interaction. And the argument is that all of this activity will ultimately benefit Ethereum itself.
That's Bread's big point. He compares it to what happened with Solana, where meme coins helped drive demand for SOL. He thinks these new engaging dApps on MegaETH, because they use ETH, will create a virtuous cycle where people need to acquire ETH to participate, and that benefits the whole Ethereum ecosystem.
Interesting. It's about creating a whole ecosystem around those fast transactions.
Right.
Now, stepping back a bit, the article also talked about MegaETH as part of a broader trend. It's not the only project focusing on really high throughput, even if it means making different choices about decentralization.
Absolutely. We're seeing other blockchains like Sui, Aptos, BNB Chain, Hyperliquid, and even Eclipse that are all going after high TPS, and they're making various trade-offs when it comes to decentralization. Vijay Chetty, the CEO of Eclipse, even said they're making similar trade-offs to MegaETH, but they've gone with a more decentralized sequencer setup to protect against short-term censorship. So it's definitely a trend in the industry.
Right, so it raises a big question for the Ethereum world. If MegaETH takes off with this focus on speed, could it force other layer 2s like Arbitrum, Base, Optimism, and Starknet to reconsider their own decentralization plans? The article mentioned that Arbitrum and Starknet actually declined to comment on this.
Yeah, that silence is pretty interesting. Prasad Mahadik had an insightful take on this. He thinks we might see a short-term trend similar to what happened with optimistic rollups versus ZK rollups. At first, everyone jumped on optimistic rollups, even though ZK tech was arguably better in some ways. He thinks some layer 2s might go with single sequencers initially to boost performance until decentralized scaling solutions catch up. But he also emphasized that in the long run, decentralization is still super important for the health of the ecosystem.
So it might be a speed race in the short term, but decentralization is still the ultimate goal. Okay, let's dive a little deeper into the technical details of MegaETH. The research from Mega Labs offers some really interesting insights into how they're trying to achieve this real-time performance. What's their overall objective?
Well, they're pretty ambitious. Their goal is to bring what they call Web 2 level real-time performance to crypto. They want to push the limits of blockchain performance using the best available hardware. It's about bridging that gap between the speed of traditional servers and the decentralized nature of blockchains. They're focused on 3 things: high transaction throughput, lots of computational capacity, and really fast response times, even under heavy load.
Now, some people might be thinking, why do we need another blockchain when there are already so many layer 2s? What's their response to that?
They argue that just making more chains doesn't actually solve the problem of scalability. They've got this table comparing gas parameters across different EVM chains in 2024, and it shows that even chains with high gas limits, like OccuBNB, are still way slower than modern Web 2 servers. For example, OccuBNB can only handle around 650 Uniswap swaps, or 3,700 ERC20 transfers per second with its current gas limit. But modern database systems can do over 1 million transactions per second, so there's a huge performance gap there.
So just having more chains doesn't mean they'll magically be faster.
Got it. They also talk about the limitations of compute capacity, right?
Yeah, they use a great example to illustrate this. They talk about calculating the Fibonacci sequence using a smart contract. For large numbers, this simple calculation takes a ton of gas and would take even a high gas chain like OccuBNB a long time to complete. But the same calculation on a normal computer, using a language like C, takes just milliseconds. It shows how limited current EVM chains are when it comes to complex computations, and how much potential there is for harnessing the power of multi-core processors. So they're looking beyond just raw transaction throughput. It's also about the kind of computations you can do efficiently on the blockchain.
Exactly. And they also talk about how the block times of most blockchains, which are typically a second or more, are just too slow for certain applications. Think about things like real-time gaming or high-frequency trading, where you need things to happen in fractions of a second. That's where their vision of a real-time blockchain comes in.
So they're aiming for a blockchain that can process transactions almost instantly, publish updates in near real time, and handle a lot of complex computations. And their solution is this idea of node specialization that we touched on earlier.
Right. They're moving away from the idea that every node has to do everything. They're delegating tasks to different types of nodes. The core security functions are handled by Ethereum and EigenDA, and then they have specialized nodes for different tasks within MegaETH itself.
So it's like a division of labor, which allows them to really optimize for speed and efficiency. They even mentioned Vitalik Buterin's endgame post in this context.
Yeah, they talked about how node specialization, as described in Endgame, can ensure decentralized validation, even if block production becomes more centralized. So even if one entity is making the blocks, everyone else can still verify that they're valid.
It's a clever way to balance performance and decentralization. And they've actually provided estimates of the hardware requirements for different types of nodes, right?
They have. For example, a sequencer node might need something like 100 CPU cores and 1 to 4 terabytes of RAM, which could cost around $10 per hour to run in the cloud. But a replica node, because it doesn't have to execute everything, could run on a much smaller machine. They estimate that a full node would cost about the same as running a full Ethereum node, so you can see the range of options for participating in the network.
So node specialization is key to their approach. But they also emphasize that it's not just about having a powerful sequencer. There are other technical challenges they're working on.
Yeah, they're very clear that building a truly real-time blockchain is hard. They've done a lot of performance testing, and they've found that even with top-of-the-line hardware, standard Ethereum clients like Reft have limitations. For example, updating the Merkle-Patricia trie, which is how Ethereum stores its state, takes a lot of time. In one test, it took 10 times longer to update the MPT than to actually execute the transactions, so just throwing faster hardware at the problem isn't enough.
So it's a much deeper engineering challenge than just raw processing power. They have a very specific approach to tackling these challenges, right?
Yeah, they call it measure then build. They do a lot of detailed performance analysis to find the bottlenecks before they even start designing solutions. And they try to push the hardware to its absolute limits with their designs. They often start from scratch rather than trying to incrementally improve existing systems. Their goal is to optimize everything so much that there's not much room left for improvement at the infrastructure level, so the industry can focus on other things like adoption and user experience.
So it's about really squeezing every bit of performance out of the technology. And they go into some of the specific challenges they're facing in the research documentation. Let's start with transaction execution. They have an interesting perspective on the limitations of the EVM.
They actually argue that the EVM itself might not be the biggest bottleneck. They've done some benchmarking with Revim, which is a really fast EVM implementation written in Rust, and it can actually achieve a decent transaction throughput on recent Ethereum blocks. They say the main inefficiencies with traditional EVM implementations are state access latency, lack of parallel execution, and interpreter overhead. Their sequencer design, with its huge amount of RAM, already solves the state access problem, so they're focusing on parallelization and reducing interpreter overhead.
Parallel EVM has been a big topic lately. What's their take on that?
They agree that it's promising, but their own measurements suggest there's actually not as much parallelism available in real-world Ethereum workloads as you might think. Even within a block, many transactions depend on each other, so you can't just execute them all at once. So they're not convinced that just implementing existing parallel EVM solutions will be enough to get them to their performance goals.
What about reducing interpreter overhead? Things like AOT and JIT compilation have been explored for that.
They've looked at those techniques too. But while they can speed up certain things, a lot of the execution time is actually spent on host and system opcodes, which are already optimized and don't really benefit from compilation. So the potential gains from compilation are limited in practice.
Okay, so beyond just execution, there's the whole challenge of state synchronization. How do all the nodes stay up to date when things are happening so fast? That seems like a major hurdle.
It really is. At MegaETH's target transaction rate, the amount of data that needs to be sent around to keep everyone in sync is massive. Even for simple ERC20 transfers, the bandwidth requirements are huge. And then you've got more complex transactions like Uniswap swaps, which generate even more data. They're looking at data compression techniques, but even then, it's a huge challenge. And there are practical limits to bandwidth too, like internet provider limitations and the need to have enough capacity for new nodes to join.
So it's like trying to drink from a fire hose. There's just so much data flowing through the system.
Exactly. And then there's the state root. That's basically a fingerprint of the entire blockchain state. And updating that at their target speed is really difficult.
Why is that?
Well, Ethereum uses a Merkle-Patricia trie for its state, and updating that is very I/O intensive. It involves lots of reading and writing to the storage. At tens of thousands of transactions per second, the demands on the storage in terms of IOPS are enormous. There are optimization techniques, but even the best ones aren't fast enough for MegaETH yet.
So they're pushing the limits of storage technology too. It's like everything has to be firing on all cylinders to make this work.
Yeah, and then there's the block gas limit. That's a fundamental part of Ethereum that prevents the network from getting overloaded. But figuring out the right gas limit for a real-time blockchain like MegaETH is tricky. If they set it too high based on optimistic performance estimates, they could overwhelm slower nodes, so they have to be very careful there.
So there are a lot of moving parts, and they all have to work together perfectly. They also emphasize the importance of supporting infrastructure, like RPC nodes and indexers.
Oh, absolutely. If the core network is super fast, but users can't actually interact with it because the RPC nodes are overloaded, or if indexers can't keep up with the data, then it's all for nothing. The whole ecosystem has to be able to handle that high throughput.
Right. It's like having a super fast race car with no pit crew. Okay, so we've covered a lot of ground here. To sum it up, MegaETH is making some bold promises about bringing insane speed and scaling to Ethereum. They're doing it by prioritizing performance and making some trade-offs with decentralization. They've got a lot of backing, and there's a whole ecosystem of new dApps being built specifically for MegaETH. But the question is, will their approach work? Can they really deliver on those promises? And what does this mean for other layer 2s?
And on the technical side, the Mega Lab's research really shows that building a truly real-time blockchain is a massive engineering undertaking. It's not just about faster computers. They're solving some really fundamental problems in new and innovative ways. Their focus on node specialization and their data-driven approach is impressive, but they still got a lot of work ahead of them.
So here's a final thought for our listeners. Does MegaETH focus on speed signal a shift in the crypto world? Are we moving towards an era where real-time performance is the top priority, even if it means compromising on some of the core principles of decentralization? What does this new level of performance enable, and are the potential trade-offs worth it? These are big questions to think about as MegaETH moves towards its public testnet. Thanks for joining us for this deep dive.